Hey traders, Steve here from Jackrabbit Trader. And in this video we're going to take a look at all the trades I made for July 2019. Finished the month out with an $840 profit by just trading the weekly chart. Let's see how I did it. Alright, so I want to take a couple minutes and go through all the trades I made for July of 2019. If you look here on my screen, you'll see all my open positions and the closed positions that I've made for the year. And we closed out a total of 19 trades in the month of July. Had 2 losers, one big one, which we'll touch on, which was a hedge that completely screwed up on. That was my fault. I take full responsibility for that one. And this is really just to show you that a lot of small profits, they add up quickly, and you can do this, with just trading outside market hours on the weekends, and really limited involvement during the day. So the whole point of this video and this series, and when we do our performance reports, is just to develop that consistency. All right, we're always looking to take money off the table, and we're always looking for new opportunities to put some money to work and go ahead and take those small profits as we're handed them. All right, so jumping over into Thinkorswim, the first trade that I want to go through is FIS, Fidelity Systems. This trade made a total of $308, and the premise behind this trade was we were taking this breakout here out of the consolidation and a move basically over 110. Okay, so our entry bar was right here, 325. We got in the following week. Okay, and the idea behind this trade was, it's a breakout, so there are no targets. We're not looking for any type of price level or anything like that. We just wanted trail stops and let it run as long as we could. So stock moved sideways, had another breakout, gave us an opportunity to trail stops up to the 110 level, and then we started to run. All right, and then you can see here that we took half of the position off, 35 shares at 119.50. All right, and no real reason for that. Just must have been a price or an open P&L type of situation where market is moving higher, stock is moving higher. We have a nice sized position on, so we want to take an opportunity to take some money off the table. And then it consolidated for a few days, or a few weeks, I should say, broke out again. And really looking back now, I got out early. Okay, I got out at the 124.5, and ultimately the market, or the stock I should say, continued to run all the way up to 135.5, and even to this up to this video, which is the end of July, we are still up in that 133.25 level. So again, we'll talk about it more in future videos, but we're not trying to be perfect. All right, we're trying to just make some money. We're not looking to necessarily hold these trades forever, and obviously hindsight is 2020. Would have loved to stay in the trade, but ultimately walked out with a $308 profit, which is plenty to get the ball rolling. McDonald's. All right, this is a pretty clean setup here. Again, long-term sideways consolidation, really from November all the way up until April. All right, stayed between the 188 and the 174 level. Finally got a breakout, took a position, 38 shares at 190, and then we let that position run and run and run. Had a big pop here in the beginning of June. All right, so we took partial profits back there in the beginning of June, and then ultimately closed the position out the first week of July. Another 20 shares sold at 207.57. All right, so we took about $17 out of that trade, and now it looks like maybe it wants to roll over. So it did continue higher for a little bit, but ultimately now looking like it's coming back. So That portion of the position that was taken off in July was a $263 profit. That doesn't account for the original sale, or the first sale in June. Facebook. All right, so Facebook was one that we discussed last week, I think, in our video, and ultimately we went over that trade that we made based on the pullback trade, a move higher off of this level. Okay, so again, it's basically making new weekly lows. All right, the highs are consecutively lower every weekly bar. Finally had a move off of above the previous week's high. All right, had a support level as a reference. So we got long this 32 shares at 185. And then we took the first portion of the position off at the previous highs, right, of that move, which was right around that 197 level. And then was really looking for it to continue to 217. Didn't happen. All right, you put in this kind of doji pattern. I was getting a little spooked by the market cycles that I speak about, and I felt that it was probably more prudent to just take the profit that we had. So taking that off at 201.70. So again, first portion of the position taken the first week of July, and then the second half was taken off a couple weeks later in the week of 7/22. So that was a total of $354 in profit. Visa. Okay, Visa. All right, same type of breakout. We're going to let this thing run as long as we can. All right, initially got in 44 shares at 171. Took 22 of those off at 180. Okay, and then we were trailing stops to the previous week's low, and that got taken out actually on the last day of July on that pullback. All right, took out the previous week's low and sold us out of the remainder of our Visa trade. All right, so a small winner here, just a few dollars, and turned out to be a $251 profit. Costco. Okay, again, same situation. Sideways consolidation for about a month or two. Nice pop on, must have probably been an earnings or a news event this week in the beginning of June. All right, that was our entry to get long. Then we continued to trail our stops up. All right, ultimately taking some profits on maybe this little pullback here at 279.94. All right, that was the first half of the position. 17 of those shares that we initially entered trailed stop to the previous week's low. That broke down, took the remainder of the position off at 278.66. And you'll see here that if I hover over this, I actually trade 5 accounts. So that's why some of the numbers won't necessarily match up with my spreadsheet. I only keep track of certain ones for my own records, whatever, leave it at that. But that's why some of these numbers don't match up. But whatever we talk about in the total profits is based off of just what I consider for my 4 core accounts. The other account is there for different reasons. But ultimately, all right, took 17 off on the previous week's break of the previous week's low, and now we're out of that trade. Costco turned out to be a $621 winner. Okay, so again, you'll see. I mean, we're talking about winners. We're talking, we're not in the thousands. We're not talking $2,000 winners, $3,000 winners. All right, we're legitimately talking about $200, $300, $400, $500 winners, and they add up quick. And we'll get to that in a few minutes. But just so you know, we're not trying to put a lot of risk on the table here. We're not shooting for home runs. We're just trying to hit these little singles, and just be consistent. And by taking these small profits, we make ourselves consistent. Starbucks. All right, so Starbucks I've traded a couple times now. I traded it back here in the beginning of February. All right, sold those shares out in the middle of May, and then this small consolidation breakout was my next entry point. All right, so just because I was out of the position doesn't mean I was, completely done with it. And the same goes for any of these stocks that we're talking about now. We want to make sure that, if they set up again, we take the trade. So here we bought 87 shares at 82.85, and the stock really just took off. All right, sold 43 at 89, and then another 44 at 89. So this long bar here was earnings. All right, I actually got stopped out because I was trailing to the previous week's low, and this is one of the downsides, but it is what it is. You can't control it. So my stop was sitting here around 89.50, and the following week's low was 89.17. So a 30-cent move basically took me out of this entire jump up in earnings. It is what it is. Would have been nice to obviously capture that extra $4 or $5 or even more, actually a $10 move on 44 shares, another $400, but it doesn't work out that way. Ultimately, Starbucks was a $454 winner. ABT. Okay, again, ABT is another one that I've traded a couple times. Took it off this pullback here, and really it just didn't do anything. Finally sold those shares out, and then another new breakout at the 81 level. All right, move that up, and ultimately consolidated for 4 or 5 weeks, moved sideways, and then we sold out again. So a portion of this position was taken off in June, the second portion the middle of July, and that was 41 shares at 87.85, and the initial buy was at 81, so about a $6, $6.50 move on those shares, and that portion that was taken off in July was a $353 profit. Okay, eBay. So eBay was a bit of a trend reversal, so you could see it was pulling back, then started moving higher. All right, ultimately got up to this 38 level, 38.50, and started chopping around. All right, between 38.50 and 35. Waited for what we thought was a breakout right here, right in the middle of April, and ultimately that pulled straight back. And this is one of the reasons that we talk about. You just got to kind of let these positions work sometimes. And this was one that we were in the red pretty quickly on the trade. Okay, once it went up to 38.50, 1, 2, 3, 4, 5 weeks in a row that it pulled back. Okay, and then ultimately, similar to Facebook, had this finally bar where it finally broke above the previous week's high. All right, so if you weren't long eBay at that point, that could have been a potential entry. And then we looked for some resistance levels above. Okay, so the first resistance level was 40.74, and you'll see we took 101 shares off on that move where it hit 40.74. All right, those actually took off at 40.83, and then we were looking for maybe some continued move. Now, I'm recording this video on July 31st. For those of you who don't remember what happened on July 31st, we'll flip this over, and the market is actually broke below the 21-day exponential moving average. If you know anything about the way I trade, this is a risk-off situation. This is what I consider the market cycle. Similar to back here, we had a market cycle where we broke below the 21-day. Who knows what's going to happen? But in this situation, it's a risk-off scenario. And for the reason I said, you know what? Got a nice little profit in eBay. I'm going to take the other half off, and we'll revisit it if we have to, right? You could always get back in. So those two positions were taken off within a week or so of each other, and a $405 profit. Okay, Microsoft. This one, we took half of our position off. Similar situation, market was starting to get a little dicey at the top here, and again, we want to just protect what we have, and we took a $150 profit on this small little move in Microsoft. Nothing big, from 132 to 138. Okay, so $6 move there. And again, with the market where it's at, maybe by the end of the week, we'll be taking the other half off, but that would be for August's performance report. Twitter. Okay, so Twitter's another situation or another scenario where we had this pullback, right? Similar to Facebook, we took half of that pullback off at the previous highs, right around 40.86. Okay, so once we had this nice move above this little downtrend line, looks like, hey, we're bouncing off a key support level at 35. We got long at 38.29. First target was always going to be 40.86, which was the previous highs. And then the next target was supposed to be 46.85. Again, with the market cycle appearing to be changing, I want to take profits in that trade, and I'd rather have the $300 in my account than lose it. So Twitter ultimately was a $468 profit for the month. And could it go to 46.85? Absolutely. Right now it doesn't fit within my process, my style. So if it's going to go, it's going to go without me. And the last one, CF. Okay, similar situation here. Had a pullback. All right, ultimately consolidated to match up to this long-term trend line. All right, as it moved closer into that trend line, finally got a breakout over 45.35. Took that as a long opportunity. All right, was looking for the first target around 52, which was the highs from, looks like, sorry, my microphone on the way, November. And then the next target was supposed to be 56.20, which was all-time highs. Again, market cycles are changing for me. Did it on the end of the month, so I decided it was time to take some profits, and that's what we did. All right, so those are all the winners we made. The CF was a $128 winner. Those are all the winners. And now, unfortunately, we got to talk about the two losers that we had. And the first one is, a typical loser, one that you would expect, and that is an EA. All right, so similar situation. It was working out just as like Twitter and CF, where we had this downtrend line. We had this little breakout above the downtrend. We were looking to get back to maybe the 105 level, then maybe 115. And, again, just because they set up nicely doesn't mean they're going to work. They all don't work. So this quickly failed. All right, the next week from the week we got in was a bearish engulfing where we started above, we finished below. Basically, this bar is eating this bar, and then the weakness continued, ultimately breaking below our $90 level, all right, which was our stop. So got in the trade at 102, out of the trade at 88, and that was a $603 profit, which at the end of the day, if that was your only loss, you go back into this, into my spreadsheet here, EA, if that's your only loss, then that's great. But now we have to talk about this one, all right? And this is one where, I kick myself, and it just goes, I put it out there because everybody makes mistakes. This was stupid. I let my ego get in the way. I wanted to be right. And ultimately, I lost 100% on my hedges that were put on in the beginning of June. And we'll go over that right now. But, just to prove a point, big losses can kill an account. All right. And if you take that loss out, my $800 profit for July becomes $3,100. All right. And it's unfortunate. It happens. I mean, look at that equity curve. That's exactly what you want to see. And it's something that we just need to learn from and go from there. So what happened? Well, let's go back to Thinkorswim. Let's go to the SPY chart, and we're going to go to the daily chart. So I know we don't really talk about this. Again, I discussed this in my weekly trading process, that there's times to hedge And it's when those market cycles are kind of turning over. So if you head on over to jackrabbittrader.com/weekly process, you could pick up that free e-course, and I'll also leave in a link in the description box below. But what happened? So I got in this trade on 6-4, and that was this bar. Let me see the best way I could show this to you. That was this bar right here. Okay? And when you look back, you say, you're an idiot. And I say, you're right. All right? I had been making money with the puts basically since that market turned over, which was really here at 5.7. So basically the whole month of May, and that's reflected on this what do you call it? Trade journal, I guess you can call it. So I made $5,600 in May when the market was going down, and that was primarily because of my put positions and my protection against the portfolio. So we were making money, and basically everything I was doing was when the market bounced higher, I would sell it. I would buy them puts. And actually, let's go over this chart. I think this one's a little bit easier to see. All right, so here you can see that market cycle turned red. That was the beginning of May. And then every time we pushed up into this 8-day, 21-day area, I would buy some puts and wait for a continued move lower, sell the puts, buy the puts, wait for them to continue lower, sell the puts. And I just traded around put positions. So here on 6-4, we had this huge move. It was a move off the lows, and I said, you know what, we're going to just continue to do the same thing that I've been doing, and I bought some puts. Excuse me. And I said, anything over the 21-day moving average, I'll get out of the puts, no problem, whatever. So sure enough, when this day came, I said, hey, this thing's really moving. So I started adding some long exposure on the portfolio side in stock. But I said I'm going to keep my puts because I could quickly see this thing rolling over. Right now, I'm starting to try to predict where I think the market's going. And now we break the next day, and now all of a sudden market cycle changes to green. Right, we broke below or above the 21-day moving average. Market cycle's green. Now it should really be based on my process that I've outlined again in that weekly trading process e-course that I use every single day. All put positions are off, right? All protection's off. I should be taking it off. And then you go and you look at your P&L, and I'm like, holy shit, I'm down like $1,200 on this thing. I said, well, let's wait for it to, there's got to be a red day coming up soon, and then I'll take it off, when we break back below or whatever. And sure enough, boom, 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 right? So now all of a sudden I'm down 50%. And now is when the ego starts kicking in, right? So now it's like, okay, well, we're coming up to these highs. Let's just wait and see what happens to these highs. It's going to reverse off of there. And sure enough, it did, right? But I was like, all right, now we're back below the 8. Here we go. Now we're going to start moving lower, double top, and then we turned right back around. And then I'm like, all right, well, now I took what should have been a very small loss, right? $1,100 is, in the grand scheme of things, considering what we talked about, is a relatively small loss when you're putting a string of winners together like I did. I could have walked out of July with a $2,000, $2,500 win. Instead, I walked out with 8. All right, and I'm not saying that that's bad, but it's bad because of the way I manage it. So I bring it up, and we talk about it because it happens to everybody. All right, I'm no different than you. I don't have any special superpowers that allow me to predict the market. We both have the same ego, or at least every human being has an ego. They want to be right, and in this game, you can't always be right. And I bring it up again because we all make mistakes. We need to learn from them, and now going forward, you got to take the loss. Okay, it just has to happen. You got to take the loss, and a good month turned into an okay month, right? Could have been a great month. So the process to get in, I don't fault that, right? I would have gotten in. Ideally, I probably should have waited to see some kind of weakness and not bought into puts on such a strong day, assuming that we would have, maybe continued higher with that momentum. All right, so maybe that was a mistake on my part, but I don't fault the entry. I fault the exit. All right, and me not managing my positions properly. All in all, for the month, again, $840 in profit. Can't complain. July, we'll see how we proceed. I'm probably gonna, now that we're maybe changing this market cycle, right? We're gonna now put a red market cycle here, and now we got to start playing some defense. All right, and again, if you want to know how to do that, check out that weekly trading process e-course. Again, the link is in the description box below. Any questions or comments, let me know. Other than that, we'll see you next week for a new video. Take care, guys.